Welcome back to the channel and happy Friday all. I'll let you guys know I'm in a great mood because of stock that I've mentioned on this channel before, but it's also one of our main plays over at the Discord that I've been gearing the whole team up over there for a big shift up. Did not fail to deliver today. That's ticker symbol AA Alcoa. Came out with their earnings today and they were phenomenal, okay? Blowing through estimates on all fronts. That's why we saw a good shift up in that stock price, closing out the day above 52-week highs. Now, hundreds of us over at the Discord have plenty of shares in this one. Many options were placed as well, and a lot of them hitting over 100% returns on the day based on how much Alcoa has moved in the market. So it was cash windfalls for me, but more importantly for the whole team over the Discord today. Now, party never stops. We're gearing up, loading up on other plays that are going to be successful. So if you guys want to ensure you are closing out this year strong, tap into the Discord by hitting that top link in this video description. Look forward to seeing you guys over there. Now let's kick things off by talking about some major news that hit the stock market today that I can guarantee you most completely overlooked, and that is retail sales increased 1% month on month from August to September. Now, I can understand 1% doesn't seem like a lot, but you gotta understand this is hundreds and billions of revenue for these retailers across the United States. Now I can hear you now. Why should we give a toss about that? Well, for starters, retail companies like a Macy's, for example, that I've spoken to you guys about on this channel before, it means their business is pumping right now because of that increase, the jump we've seen in retail sales. And we already know retail sales were strong, so they're now looking even stronger. So if sales are going to be good, that means revenues are going to come in good, that means their earnings are going to come in good, and that means the stock price should follow with an appreciation. Now, the other reason is that your consumer discretionary industry, which is your spending on non-essentials, takes up about 10% of the SP 500. So if we all want to avoid a deeper correction in the markets, it's good to see consumer discretionary is performing well because maybe they can account for some of the other lagging areas in the market, like the mega cap tech space, for example. Now, the consensus was, the expectation was we would see a dip in retail sales in September. This is because we've seen a lot of pulling back of government stimulus. However, consumers still got pent-up demand to go out and shop, still sitting on good cash balances from all their savings during the pandemic. And now that the Delta is seeming more controlled, the spread is more controlled, that means we're seeing a lot of retail activity, people going out to the department stores, spending, and that activity is continuing to perform well as we go through this last quarter of the year. Now, what's our expectation for retail sales in the months coming up? Because that is obviously going to govern where we position ourselves if we're going to add retail to our portfolios or increase our exposure as we continue through this fourth quarter. Well, take it like this, we're going through the most key season of the entire year for retail, with Black Friday coming up, with Christmas sales coming up. So you can bet when we see those numbers for October, they're going to come in better than September. November's top in October and December's top in November. Then we'll cool off in January. So this is good signs for the consumer discretionary space, especially those players out there in the market. They're able to navigate the supply chain issues that we are seeing right now. So what I've done is I've allocated more capital to some of our favorite names in the space. Okay, also let's talk major movers on the day. Now remember, this isn't financial advice. This isn't any recommendations to buy or sell any stocks in the market. What I'm trying to do is get you guys informed on these markets, help you develop strategies that you can go out and apply and make winning moves. Let's kick things off with ticker symbol SPCE. That's Virgin Galactic. This is a space tourism company headed up by Sir Richard Branson himself. Now that stock was in free fall today. Last time I checked, it was down over 15%. Now this is because during their last flight, there was some safety concerns, okay? This rocket, it was veering off course. So what they need to do is further investigations, tests, and ensure they can correct that matter in their next follow-on flight so they can get things perfect, okay? You can't have a space tourism company and not have things go to plan because it's safety concerns. Now another is they're doing refurbishments at the moment as well, and this is going to last 8 to 10 months. So into next year, July, August time. So what this does is it sets them back, okay? So they've still got 2 more test flights before they go and launch that Unity 25, and that is their commercial flights where they start taking people on board. So now they've just extended that time horizon. Investors aren't happy about that. There's doubts about the company and their ability to stick to timelines naturally. So let's talk about it. If you're looking for extreme volatility, look no further than SPCE. This is one we've seen wild swings in over the last 12 months. We've seen this drop down over 70% to then climb over 200%. Now with a stock like this, it can be hard to find a starting point. So what I like to do is I like to understand the reasons why we've seen big shifts up and big shifts down, and understand and see if there's a reason why that might repeat in the future. Now, the last time we saw the stock price spike, it was in anticipation in the run up to their last flight. The reason why we saw it tank after that was because they came out and announced an offering of $500 million. Now, both of these scenarios are very much repeatable, and we will see it in the future again. We'll see more flights, test flights, real flights, and it's no doubt that they will also do offerings again, all right? Issue more shares to get more capital. Their last round was only 500 million. This is a space tourism company. You're gonna need billions in funding. Bear in mind, this is a company that doesn't make any revenues, any profits, so you're gonna need money pumped into the business to keep it going, okay? This is what we call a high capital expenditure business. Now, that being said, the way it's coming down right now, last time I saw it was hovering around that $20 mark. Now you're gonna get a ton of people jumping in at this level thinking it's gonna dip back up. Now, what the technicals tell us is there is support at around $15, okay? So over the last year, we've seen some strong support at about $15. So from the technicals, it might indicate that we might trend down to $15 before we're seeing it bounce back up. Now I say I'm not in this stock for full disclosure. This is one that was trending on the market, one of the ones that was talked about a lot. So I want to give you guys my 2 cents on the play. Now, because of all the hurdles they need to get over, because they're not able to stick to timelines, because of the high capital expenditure nature of the business and concerns around profitability that will come into the picture at some point in time once they get going, this is one that I personally can't invest in, but any stock in the market can be a trade. If you understand the technicals, you know a little bit about the fundamentals, you can put the two together and you can have yourself a winning opportunity on your hands. All right, guys, so that's what I've got for you in this one. On your way out, make sure you guys hit that like button for me. If you're new, join the movement by hitting that subscribe, and I catch you guys on the next one.